Hey traders, welcome back to this week's weekly Forex forecast. In last week's video, I was highlighting how we had that 4 standard deviation week higher in euro dollar, 3 standard deviation sell off in the DXY, and how often that actually marks major bottoms in the DXY. Now, interestingly, last week, we did push a bit higher in euro dollar, but look at this close. Look at this week close. Closed back below last week's high. This is pretty bearish. So we're right in that area now where we could have quite a sharp reversal, or we could just hold for a couple of weeks and push higher. What is going to maybe decide the next move in euro dollar? Probably FOMC coming up this week. So we have 4 interest rate decisions coming up this week. It is a busy week, and we've only just really seen the Forex market settling down last week after 2 or 3 big weeks. So I'm going to show you in today's video exactly the pairs and setups I'm going to be looking for to sidestep the majority of those interest rate decisions next week, and to give a playbook that will essentially allow us to capture the low-hanging fruit and sidestep the risk, of holding through those interest rate decisions if possible next week. So if you look at the euro dollar pair on the weekly time horizon, again, the blue levels, as we're going to be looking at throughout the video, and as I always look at, on the 4-hour chart in these videos, these are the levels which essentially state that the weekly candle coming up this week has roughly a 7 out of 10 chance of closing inside these levels or between this range. And it has a 9 out of 10 chance, as priced by prevailing market probabilities, of closing the week inside the second range. So when we get moves outside of these ranges during the week or intra-week, this sets up the high probability opportunities that I personally take myself and that we put out in real time with GMT members. So that's what we're going to be looking at as we go through the video, but portfolio selection, choosing the right markets to trade, is the most important thing really, because you can apply any kind of strategy to the wrong market and it's not going to work. So coming up next week, I do think the dollar pairs, generally speaking, are going to be best avoided, but we cover euro dollar every single week. So if we drop down to the 4-hour chart on euro dollar just to see where we're at, you can see the kind of consolidation. Coming up next week, we do have FOMC, as I said, on Wednesday. But we also have the BOJ coming up next week. They're expected to hike interest rates. We have the Swiss National Bank, who are expected to cut interest rates. And we have the Bank of England, who are expected to hold interest rates. And those events are coming up Wednesday and Thursday. So what that means is the first half of the week gives us potentially nice opportunities to try and capture some reversals. And then coming into Wednesday and Thursday, we have a higher chance of directional moves and markets kind of breaking out because you get the catalyst. So the markets are most likely going to kind of be corrective and kind of bounce around into Wednesday, and then potentially get a bit more directional Wednesday and Thursday when we have these catalysts coming out. So just bear that in mind if you're trading next week. So in euro dollar, what I would like to see is, I would like to see, if we're looking at this to the long side, if you are looking at long opportunities next week based on this, because we haven't had a pullback to the weekly lower bound yet. So essentially the market is still strong. If we can get a breach below the 1.07708, this market enters the buy zone. So that means that we essentially become oversold during the week, and that weekly candle is expected to kind of revert back inside these ranges. And most of the time you won't test these levels unless you've got a catalyst. Do we have a catalyst next week? Yes, we do. Euro dollar has a catalyst with FOMC on Wednesday. So this is why, euro dollar and the dollar pairs next week are a little bit more tricky. So yes, below the 1.07708, perhaps between Monday and Wednesday, I would look for double bottoms, inverse head and shoulders, and reversals. However, breakout trading before Wednesday, probably not a great idea, because if this market's just going to chop around, then breakout trades on balance are likely just to get chopped up. And alternatively, what if we have post FOMC and we see euro dollar coming all the way down to the second lower bound? So this is an opportunity where it doesn't take out any upper or lower bounds before FOMC, and then on FOMC we get a big move down to the second lower bound. This would be the second place after FOMC. I would potentially look for a 1 or 2 day reversal to the upside. But again, we cover this market every week. It's not my favorite market going into next week. I think the dollar pairs are best sidestep generally next week, and I think there are much better market opportunities than the dollar pairs going into next week, which we're going to look at in today's video. Okay, so moving on to portfolio selection, the good thing about this week is that the portfolio selection is quite clear. We have the New Zealand, the Aussie, and the CAD to the downside as the best shorts. And we still have to the upside the euro, the Swiss franc, and the pound as the best long opportunities. You can see the US dollar, it is now kind of bearish to neutral, getting a bit weaker. And did you notice last week we had a soft CPI print, of course, where CPI out the US came out lower than expected. And this, of course, is bearish for the dollar, even though euro dollar couldn't push higher off of it. But did you notice the PPI print that followed it? Deflation in PPI, which tends to lead CPI, on a month-over-month basis in core PPI. Now, I'm not saying that CPI is going to also turn negative, but it is pointing towards inflation coming down in a way that deflation becomes more of the risk, even if the CPI print doesn't become deflationary itself. Lower inflation or undershooting inflation as a target for the Federal Reserve, or potentially deflationary, if there was a recession. This is what the market is now kind of picking up on, and you can see the shift towards this risk off kind of appetite in the market. It's not just with stocks selling off, but we see it in Forex, because if you've got deflation or you've got a deflationary outlook, which currencies underperform? The New Zealand, the Aussie, the CAD, the commodity currencies. Now, on a flight to safety, the US dollar and the Japanese yen should be at the top. So what we're seeing at the moment with the euro, the franc, and the pound outperforming the commodity currencies, we're seeing the commodity currencies essentially suffering as a kind of deflationary risk-off outlook takes over. But it's not yet quite severe enough to cause a flight to safety and a big rush to risk-off assets. Because if that were the case, the yen and the dollar would be right at the top. Is that coming? Potentially. But for right now, we're still seeing the EU majors outperforming the commodity currencies and also the yen and the dollar, which is what we want to be focused on this week. So coming into this week, euro dollar we've looked at, but the dollar pairs I'm not too much interested in. So euro New Zealand to the upside, euro Aussie to the upside, EurCad to the upside, once again, is something I'm going to be interested in. We're also going to look at New Zealand franc, Aussie franc, and CAD franc to the downside. And we're also going to look at the pound pairs. So yes, we've got the interest rate decision on Thursday, but pound New Zealand, pound Aussie, pound CAD to the upside are definitely pairs that I'm interested in. And think about this. We also are expecting the Bank of England to hold on Thursday. So the pound pairs are kind of good in the sense that you could probably get opportunities before Thursday. So the interest rate decisions later on in the week, because then you can be in and out of them, before the interest rate decision, because it's quite far in the week, and let the interest rate decision pass and just, assess them afterwards. But if you get involved in pound long positions and you're forced to hold them for whatever reason through the interest rate decision, if they come out and hold rates, on balance, this is a positive relative to other markets, which are actually, they're starting to look to cut rates. Certainly the Swiss National Bank this week is one of those. So I'd also like pound New Zealand, pound Aussie, and pound CAD to the upside. And those are the pairs that are top of my watch list and we're going to be looking at in today's video. Okay, so kicking off the watch list with crude oil, as we do every single week, I can still only be short or do nothing in crude oil. I cannot buy this market. And so what I want to see is I want to see crude oil pushing higher and entering the sell zone, which is above the 69.43. Because I know at that point, the weekly candle has, based on market pricing, roughly a 7 out of 10 chance of coming back inside this range. And it usually does it, for 1 or 2 days. You can get 3, 4, or even major reversals from these levels, but I'm looking to capture 1 to 2 days worth of movement out of 5 in any of these pairs, any given pair. So if we trade above the 69.43, I'm going to be looking for bearish setups. Very simple stuff, double tops, head and shoulders, the stuff that happens over and over and over and over again. Here's a double top, for example, right here. I can see it straight away, breaks through. So I'd like to see it push through. If we can test these highs, that would be great. They're still kind of below halfway. Once you break above halfway, you have to ask the question, are we going to take out the second upper bound? It doesn't happen very often, but, the best kind of opportunities for me are the markets that don't pass the kind of halfway mark between the first and second upper bound or first and second lower bound. So if we can break through and test these highs, we're still kind of within the realm of the lower half of this sell zone. This would be a great opportunity to start to look for buyers to fail. You see momentum slowing. And then once you get momentum slowing, you can look for that reversal, that liquidation back inside the range for 1 or 2 days. If we end up blasting through, whether I'm short or not, the second upper bound essentially acts as a risk management tool for me. I get the opportunity to pull the trigger a second time on a short if I want to. Don't have to, but if I want to. I can't add additional positions between these levels. Otherwise, what's happening is I'm just adding and taking more and more risk with the first position. You know, what's the difference between shorting here? You know, okay, it comes up a little bit more and you short here. But really, I've just doubled my position on the first trade. That's really all I've done, because the odds of a reversal are more or less the same. But once we take out the second upper bound, the odds of a reversal have increased greatly from the first position. And so therefore, it makes sense to have a second opportunity to pull the trigger if you so wish. So these are mainly used for risk management or cost averaging, but in the event that it gets there and I'm not already short, they can be fantastic initial positions for a 1 or 2 day reversal. So that's what I'm going to be looking for primarily in crude oil. And the third thing you can look for is if we start to make our way higher, you can, if you want, look to see if you can get that bear flag opportunity during the week. It's where you sell off, the moving average follows it, and it's the first breakdown and pullback into the moving average that sets up very often a nice bear flag opportunity. In this case, down to the prior lows and the profit taking target, which would be the 64.94 or just below it, because this is where we enter the buy zone. I can only short this or do nothing. So this becomes a profit taking zone for me on any intra-week shorts in crude oil next week. Okay, so kicking off the Forex universe with the Euro pairs, starting with Euro New Zealand. I did highlight in last week's video how the Euro pairs were just very, very extended, and we got this kind of move up and then we started to correct. So I do think we're probably going to correct a bit more coming into the start of the week. I would personally like to see Euro New Zealand down, taking out the lower bound at the 1.8765, and we also have a really nice key area of support right here. So this is a market where, we could pull back, we could test this, breach the low, enter the buy zone, and pretty much, maybe in this portion of the buy zone actually start to reverse. Why? Because we've already got a support level here that it could struggle with. And that's what I'm going to be looking at. This key area of support right here. Can we trade into this, attempt to push through, enter the buy zone, and then start to run out of steam? Because if we can, this is the 1 or 2 day reversal I'm going to be looking for next week. If we end up all the way down at the second lower bound, this is generally speaking more of a cost average kind of risk management tool, because most of the time it's not going to get there. So once we've entered the buy zone, that's when I'm going to start to look for setups. I'm not necessarily always going to jump in as soon as it hits this level. As soon as it hits that level, I get an alert in Hedge Dash. It tells me to start to look. And then I come down and start to see what the price action is doing. So if we get that, I'm going to be looking for those 1 or 2 days. If we trade below the 1.8602, if I'm not already involved and it trades down in this area, that is a great initial position to look for. And the third and final thing is, if we get down here quite close and we pull back, maybe wouldn't look for long straight out the gate because it still needs to pause a little bit, some of the Euro pairs. But you can look for that breakout, that bull flag setup where the moving average follows it. And that first pullback, there's a mini one right there. That first pullback, this one kind of crisscrosses it, but it's there as well. That first pullback sets up a nice bull flag opportunity very often, in this case, into the sell zone. Now, I can't short this market. I can only buy it or do nothing. But if I'm already long, you can exit the position by selling it above the 1.90908. And I wouldn't be surprised if we did get this bull flag, if it took out, tested this quite deeply, took out the prior high, because these markets are still a little bit volatile. Settled down a lot, but still a little bit volatile, especially the Euro pairs. Next is EurAusd. So again, this market still overextended. Quantitatively, still needs to pause and correct. So what I'd like to see primarily, the primary setup would be a breach of the 1.70591. There's a really nice low right here. So a breach of this, I'm looking to the left, Hedge Dash will alert me straight away to say, A level's been taken out. I'll go and have a look at it. We breached the 1.70591 in EurAusd. I'm going to be looking at this low. Can we get sellers attempting to break through this support area? Because if they do, and they start to fail, especially when we're oversold during the week already in a market I'm really looking to be long or for long positions, this is where you get those snapbacks, a short covering rally in this case, and that's where you can get paid for 1 or 2 days out of 5 next week. So I'm going to be looking for that setup primarily. Below the 1.69133 is where we become extremely oversold during the week. This would be the second place, whether I'm long or not, that I would look for a potential 1 or 2 day reversal. And the third and final thing is, if we start to make our way down towards the lower bound, but we don't get there and we reverse with strength, you can look for those bull flag setups very often. That first pullback into the moving average and the push away. In this case, above the 1.73509, we enter that kind of profit taking zone. And the prior high sitting right in that would be a pretty good profit taking target for any bull flags next week. And finally, EurCad, I can either be a buyer or do nothing next week. I would also like to see this pull back a bit because this is still overextended quantitatively, and long positions in this until this kind of washes out, this overextension, they can be a bit tricky. So I would like to see this pull back first, correct, wash out that overextension, which below the 1.5504 it probably would. And once we enter this area, I mean, there's not too much on the left-hand side. This is quite deep. So when I get these kind of setups where, there's not too much of a support level down here, I like to look for the market to create its own support. So essentially it tests the lower bound, and then maybe it tests that low, and then tests that low, and you can see it running out of steam, and then you get the sellers liquidating because they're oversold during the week in a market that's strong. And this is where I'm going to be looking to get paid potentially for 1 or 2 days out of 5 next week. If we end up below the 1.53784, this is not a primary setup, but this is a place I would also look for a 1 or 2 day reversal, whether I'm long already or not. And as with the other euro pairs, if you get it moving down towards the lower bound, and then perhaps you get FOMC, right? And for whatever reason that rallies the euro pairs, moving average follows it, you can look for that bull flag setup into profit taking zone at the 1.57558. Moving on to the Swiss franc pairs, we have the SNB on Thursday, so I'd ideally like to be in and out of these before Thursday. That's really the play for next week that I'm looking at. I can either be short or do nothing. I cannot buy this market, and the first weekly upper bound is at 0.51429. We do have a kind of minor prior high just here, and it also sits as a retest of these lows over here. So if we can get into this area, and we can start to test this area here in the sell zone, this is where I'm going to begin to look. Can we get buyers attempting to break through these lows and this high and fail? They start to lack momentum. That's where I'd be looking for 1 or 2 day liquidation, especially with the SNB on Thursday. These markets often hold their ranges. Now, we did see on the euro pairs just before ECB, in the last couple of weeks, they exploded, even though we had the ECB. But most of the time, interest rate decisions, the vast majority of the time, again, the euro pairs really moved on an unexpected fiscal announcement. So you're not going to have those very often at all. Most of the time, therefore, these markets will hold their ranges in the lead up to an interest rate decision. And again, as traders, all we can do is play the probabilities, play the statistics. What's the highest probability outcome, and then align ourselves with that when we're taking setups. So that's what I'm going to be looking for to the downside New Zealand franc. If we end up above the 0.51988, perhaps after the SNB, this would be the second place I'd look for a potential 1 or 2 day reversal. And the third and final thing is maybe on the SNB itself, you get a breakout to the downside, breaks back below the moving average, and then you get the pullback. You can look for that follow through bear flag into the sell zone at the 0.50311. The buy zone at the 0.50311. So again, the buy zone for me next week in this would only be a profit taking area because I cannot buy this market, I can only short it. So just bear in mind that, we do have the S&P on Thursday. They're expected to cut rates. So if they cut rates, you would expect to see weakness in the Swiss franc. So in order to get this kind of bear flag, they would probably have to unexpectedly hold rates or fail to cut rates, right? That's where you could get that kind of bear flag set up post SNB on Thursday. Next is Aussie franc. I can either be short or do nothing. Buying this market is not an option for me next week. What I like about this market is if we can push higher into the sell zone, look at this. Here's a really nice prior high. Here's a really nice prior high. Here's a really nice prior high. All of these are going to cause buyers to struggle. Unless you've got that kind of bearish catalyst, it blasts straight through maybe after Thursday. Certainly in the lead up to Thursday, Monday, Tuesday, Wednesday into Thursday, any push into this area, into the sell zone and an attempt to break these highs, this is likely going to set up a nice opportunity where buyers, they start to, maybe they're sitting on profits, right? They're failing at these highs, they're lacking momentum. Put yourself in their shoes. We've got the, Swiss National Bank tomorrow. Maybe I'm going to book my profits, right? Before the interest rate decision, because, I'm sitting on profits on maybe some intra-week longs. And, SNB tomorrow, I don't want to take that risk. I'm going to book my profits. That's often why you see these ranges hold and you get those reversals leading into the interest rate decisions. Great opportunity for a 1 or 2 day liquidation back inside the range before the SMB on Thursday. If we end up perhaps after Thursday at the 0.57160, this is where we become extremely overbought during the week, and I would also consider looking for reversals to the downside for a 1 or 2 day liquidation. And the third and final thing is would be the bear flag setup, would be the only thing I could look for intra-week here personally. And in this case, this would probably, be a failure to cut interest rates on Thursday, like with the other franc pairs. And finally, we have CAD franc. I can either be short or do nothing. Buying this market is not an option for me next week. I also really like the setup here where we've got the prior high and also these lows. So again, very similar to what we just looked at. If we breach the 0.62190, we become overbought during the week. In a market, I'm looking for shorts. So again, especially in the lead up, say we get an opportunity Monday or Tuesday where we start to see it driving up into these highs, put yourself in the shoes of the buyers. Do you want to hold this through the SMB on Thursday and potentially, give up all your profits because the SMB come out and they decide not to cut rates? Or are you going to book your profits and sit the SMB out? A lot of traders will do that. And that is where you can get paid on any kind of reversal or liquidation before the SMB decision. If we start to trade into the sell zone and take out, this high specifically is what I'd be looking at. If we end up above the 0.62779, probably after the SMB, if we do get that interest rate cut, this would still be the second place I would be looking for a potential 1 or 2 day reversal. And the third and final thing, if we get the opposite, so instead of getting the cut, you get a failure to cut rates and you see some strength in the Swiss franc, that would set up the potential bear flag after the SMB on Thursday into the profit taking zone below the 0.6101. And last but not least, we have the pound pairs. Again, we've got the Bank of England out on Thursday. So statistically speaking, this market should hold its range into the Bank of England decision. What I'd like to see, therefore, is for pound New Zealand to sell off, start to trade below the 2.23093. There's not really anywhere over here which is key area of support. So again, I would like to start to see this finding support itself. And this would be a good opportunity, especially on Tuesday or Wednesday, to start to look for potential reversals. Because think again, put yourself in the shoes of the sellers. Anybody who sells that, if it does sell off below the lower bound before Thursday, especially if we're expecting the Bank of England to hold rates, this is likely to encourage many sellers to pull their positions, book their profits before Thursday's Bank of England decision. And that is where you can get a really nice 1 or 2 day liquidation back inside the range next week. If we end up below the 2.21126, it probably means that the Bank of England have ended up cutting unexpectedly. I would consider a 1 or 2 day reversal from below this level because it would be extremely oversold during the week in a market that is still actually technically trending higher. And the third and final thing is if you get the market kind of doing nothing or pulling back, and then on the Bank of England decision, you get strength, moving average follows it, that first pullback pushes up. This one just kind of hugs it. In fact, that's how you know it's an even better setup when it pulls back towards the moving average, but it doesn't even have any weakness to test it. It consolidates into it, kind of hugs it, and then you get that push away. Into, in this case, the profit taking zone above the 2.2702, and this high right here would be a very good profit taking target for any intra-week longs. Next is pound Aussie. Ideally, I'd like to see this pull back and test the 2.02803. We do have a nice support level here, so I'd be looking for it to test this support, tag the buy zone and start to fail below this support. That would set up a really good opportunity for a 1 or 2 day reversal, especially before Thursday. If we breach this low and we go straight through it like a hot knife through butter, we do also have another nice low down here. So again, this would be the second place. We're going straight through this and hit this and we start to lack momentum. This would be the second place I'd be looking for that 1 or 2 day reversal. So two really nice support levels here to see if you can get sellers attempting to break through and then pulling their positions. If we end up below the 2.0104, why would that be the case? Probably because they've cut unexpectedly. In that case, we're so overextended during the week that I would still consider a 1 or 2 day reversal, even if it's just shorts booking their profits. That's why you get this kind of waving back and forth of markets. Even very extended markets will pause and correct because people are going to book their profits along the way. And the third and final thing is if we start to pull back, and again, we break up on the Bank of England itself, breakout trading before Thursday, probably going to be a difficult endeavor because the market's probably just going to range. But if we get this after Thursday, you can look for that pullback, hug in the moving average and into the prior highs, into the sell zone above the 2.06317. Great profit taking area for any intra-week longs next week in pound Aussie. And finally, pound CAD, don't forget crude oil weakening is putting downward pressure on the Canadian dollar. And so I do really like CAD shorts, but these markets are very extended, you know, EuroCad, pound CAD. So I really want to see these pulling back more first. Ideally, I'd like to see this breach in the 1.84271 and look at this really nice support area just here. So if we breach this, enter the buy zone and test this low, this is where I'm going to be primarily looking. There is one bit further down, but it's starting to get towards second lower bound. So this low right here is going to be the primary place I'm going to be looking next week on any pullback for sellers struggling and then pulling their positions as they fail at this low back inside the range for a 1 or 2 day liquidation. If we find ourselves after the Bank of England down below the 1.8274, I would consider, I'd have to assess everything what's going on, but I would consider potential initial positions for a 1 or 2 day reversal back inside the bigger range. And if we get the continued correction and then on the Bank of England, we're just kind of down here and we get that rally. You know, maybe they hold rates and they say, you know, we're actually going to end up holding rates for longer than we expect, or maybe we're even going to have to raise rates again in the future. That kind of forward guidance, you get that bullish rally, then you can look for that bull flag setup as it pulls back, hugs the moving average or tests it, and then move away into the profit taking zone. And of course, this high right here sitting in the profit taking zone would be a great profit taking target if you want to get specific, you know, an exact price point to the upside next week. Okay, so wrapping up the video with gold and silver as always. Now, both of these are priced in dollars. What's my bias on the dollar? Well, the dollar is bearish and I have a bearish bias on it, but it's so bearish, as we discussed, it could be a capitulation low, which is actually bullish. So the outlook for me is not that clear on the dollar. It could be a V bottom or it could kind of move sideways and sell off again. So it's not a clear bias. I don't have a clear or strong bias in it. And that's one of the reasons why I'm sidestepping the dollar pairs primarily this week alongside FOMC. But on balance, I do have a bullish bias. On balance, if I have to do something, if I can only be long or short, I'd rather be a buyer of these markets given the opportunity. Doesn't mean they have to go up, but a bullish bias for me just simply means if they do sell off, I'm looking to buy it or looking for long opportunities. So in gold, what I'd like to see is I'd primarily like to see this come down, stair step the prior high and trade below the 2924.06. This actually also, if you were to draw a trend line on here, this might be a little bit wonky, but you can see it actually intersects right there. So this kind of area in gold next week is a very good area to start to look for a 1 or 2 day reversal to the upside. It could even be the start of a bigger move up, but for me personally, I'm just looking to capture short-term 1 or 2 days. If we were to break down and take this level out, not only would I be very surprised because it would be a major reversal in gold, but we would also have to see a massive move up in the dollar. And I don't think that's going to happen at all next week, but just reactively speaking, unexpectedly something happened, I would consider a 1 or 2 day reversal back inside the bigger range from below this level. And the third and final thing is you can look for that bull flag setup where it pulls back, breaches the moving average goes flat, and then it breaks back above it, and you get that first pullback opportunity into the sell zone. But I'm not looking at shorting it. You know, selling this for me would only be if I was already long and I can sell it and book profits. But into the sell zone, profit taking zone above the 3046.01. Out of gold and silver, on balance, I much prefer gold. Why? Because if we do start to see a V bottom in the dollar, which is not guaranteed, but if we do start to see it, you know, gold and the dollar can go up at the same time much easier than the dollar and silver. So I would prefer out of the two to be long gold, but on balance, I'm looking for bullish opportunities in both if they set up nicely. Wrapping up the video then with silver, also looking for long opportunities, like I said, but if we get the opportunity in both, you know, out of the two, I'd prefer to be long gold. So I can either buy this market or do nothing next week. I would ideally like to see it below the 32.59. Again, even though this is a little bit steeper, you can see we kind of have this setup where, you know, even though my trend line's a bit wonky, you can see the area of confluence right here between prior highs, the buy zone where we start to enter it, and this kind of ascending trend line. This would also be a great place for a 1 or 2 day reversal. If we end up below the 31.39, something major has happened, and this is probably a reversal to the downside in silver. I would still, on the basis of profit taking, look for a 1 or 2 day liquidation back inside the bigger range. And the third and final thing, as always, if you break down below the moving average, kind of flattens out, and then you get the re-break, the kind of trend continuation, you you can look for that bull flag setup into profit taking zone above 34.99 next week in silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.